mentioned during this summit that one of the things you're concerned about is some complacency regarding the market. What do you mean by that?
Look, the market is at inflation-adjusted all-time highs, yet the VIX, which is a measure of volatility, is almost at historical lows, which spells complacency. Historically, I think that complacency has a bias more to the downside of the market than the upside. So complacency, equals risk many times.
Do you think clients are underestimating risks, potential risks?
Well, again, as measured by the VIX, I would suggest that they are. I think there's a lot of risks, geopolitical risks, and risks of maybe interest rate spikes and a number of things that could question the valuation of the market. I just think it's more complacency, and so my instincts are that when complacency is like this, the risks tend to be higher than they are. Just like when runaway optimism also sometimes is a negative.
One negative, potentially for you, is just monitoring day to day what happens in Washington, D.C. What's the biggest impact right now, do you think, coming out of the nation's capital to your industry and business?
Look, financial services, rightfully so, has been under the regulatory microscope since the financial crisis. However, in my opinion, the pendulum has swung too far, and that the level of regulation, the cost of regulation, is beginning to become a burden on the industry, and then ultimately consumers and the cost of finance. So I think that is a concern.